looking at a bit softer market here this morning. What's going on, Brian?
I think the market is kind of reacting to a little bit of increase in farmer sales of the old crop corn category. We're not moving a lot of corn, but our exports are starting to slow down as well, so we maybe don't need to move as much. We had moved higher this week, anticipating a bullish report on Tuesday, and I thought, it was a bullish report, probably better than expected, but not a great reaction because a lot of it had been built into the report already. And we haven't seen any private export sales this week for corn. We saw a soybean sale this morning, but that's the first one in a week for soybeans. And, it's just a tough time of the year to get a lot of this export business because you have a lot of South American production estimates, and it's expected to see big crops out of South America, and they're going to overtake our U.S. exports. In fact, the sale this morning to that unknown destination could end up being canceled at some point down the road. So it's a tough time of year unless you get adverse weather in South America to see a sustained rally in corn and soybeans, but usually you get a little bit of support because of tight basis and narrowing of spreads and that sort of thing. And we've seen that in corn this week with a big rally, and now we're seeing a little bit more profit taking or a little bit of setback anyway as a result today.
Yeah. Well, even this morning's export sales report wasn't the greatest.
No, it wasn't. It wasn't terrible, but it wasn't great either. I think we're going to see much worse export sales coming up, as we get into the new year. But yeah, 37 million bushels for corn. It's a good number, not great by any means, not what we were. And I think that's kind of telling the market that our sales are starting to slow at these price levels, and now we're maybe going to see the market pull back a little bit from these recent highs because we had rallied up to the highest levels since October 2nd yesterday.
How about livestock? What's going on there?
Boy, cattle market's been very strong this week, and now we saw December go from a discount to the cash to a premium above the cash. 191 is what we saw yesterday in Kansas and Texas, and we were over 193 today earlier in December futures. So that premium that we're holding it may attract some deliveries at some point in time here now that we're in this delivery period. I don't think we'll see any quite yet, but we get $2 to $3 premium to the cash. We could start seeing some deliveries at that point in time. There is a lot of hedging from producers here as these price levels are really high, really good looking levels. So there's quite a bit of hedging. I think that'll cap this rally here for this short period of time, and maybe in the longer term, we may have pullbacks, but we expect to see those prices even go higher into the second quarter of this next year.
Anything else we should be aware of?
The CONAB was out this morning, and their production estimates very similar to what they saw earlier. Slight increase in soybeans, slight decrease in corn production. We started Grain Exchange raised their Argentina wheat estimate to 19.3 million tons. So a lot of crops across the world look like it's going to be a big supply this year.
Yeah, unless we get a major weather change,
right?
Those crops just keep coming at us.
Yeah, that's going to be an issue when we have oversupply like that. And there's some weather models hinting at maybe drier weather for Argentina until last part of December. But if that's the case, watch soybean meal. That is what I've been telling clients. If meal takes off and rallies, then the market has accepted those drier weather forecasts. But until meal takes off and rallies, soybeans are not going to go anywhere.
Yeah, for sure. All right, very good. Appreciate it, Brian. Thank you much for the time.